Hi everyone, my name is Emily Powell and welcome back to the SGK Wealth Compass where financial insights are clearly explained. Today it is currently Friday, May 1st, and as always we have John Steigerwald and Eric Randolph here to tell you what's happened in the markets this week. Thank you so much and we hope you enjoy.
Good morning, everyone. My name is John Steigerwald. I'm CEO of SGK Wealth Advisors.
And I'm Eric Randolph, CFP and Portfolio Manager.
As you know, we like to start these podcasts off by talking about something that makes SGK unique. Eric, let's talk dividend increases this time.
Love to talk about dividend increases. That's particularly appropriate right now because we have so many companies that actually are reporting dividends. Actually, I like to refer to them as the OPI of investing. This is the original passive income source, okay? And really what we're seeing is we're not even out of the first half of the year. Already before earnings started this week, okay, we had 19 names in your portfolio that actually increased their dividend. Average increase so far, 8.5% dividend increase, okay? Why is that so important? Let's say that inflation is growing at, say, 3.2, 3.3%, and if the income stream from your stocks is growing at 8.5%, okay, and growing, all right, then you're seeing the income stream is growing at a multiple of inflation, okay? That's real inflation protection, and that's what you have in your portfolio, as a matter of fact.
Absolutely. For clarity, that's on a year-to-date basis, those 19 companies.
Absolutely.
Yeah. And
absolutely.
By the way, I filled my car up with one of my cars up with gas this week, $75. I haven't seen that number for a while.
So you should see what this guy drives.
Yeah,
okay?
we'll go down that road. But those dividend increases as a client of the firm. We don't cooking here, own the same stocks that our clients do. That's real money to us as investors. We love that here at SGK, right?
Makes a big difference. So I know we had earnings. Overall, how are we doing as far as earnings news?
Yeah, I apologize for the length of the weekly email this week, but we like to keep our clients informed. There was a lot of companies that released earnings, including dividend increasers this week. We were very pleased with the results here at SGK. We'll hit some highlights at the end of the podcast as we normally do. But just some broad stats on earnings on the S&P 500. Earnings exceeded expectations so far by about 1.3% above estimates. And the good news is we've had broad participation. So 80% of companies have beaten earnings expectations. That's much higher than historical averages. So that's what we like to see, broad participation. The economy here in the U.S. is very resilient right now. And on that note, let's talk some of the economic data, Eric.
So as you know, I like to go ahead and start out on a really strong note. And really what I'm talking about here is business investments actually being driven by what AI surge, okay? And this is actually showing up in several different places in the numbers. U.S. GDP growth. GDP rose 2% on an annualized basis in the first quarter. Consumers spending, of course, was actually very resilient. Spending increased 1.6%, led by services like healthcare and also finances, okay? This is the part you're really going to like. Investment spending rose 10.4%. That's the fastest we've seen in 3 years.
That's business investments.
That's business investment.
And what would you
spending.
attribute that to, Eric?
Gee, I think that might have something to do with AI,
Nice.
okay, and the build out of data centers. Okay, but again, this is having a huge impact on the economy at large. All that spending does actually have a bit of an impact on inflation. And so we did see that inflation did jump some. The Fed's preferred inflation gauge rose 0.7% in March. That's actually the most we've seen since 2022.
Yeah, we don't like to see that.
I know, right? Energy, of course, key driver. Gasoline prices up highest since when? Since 2022. Spending slowed modestly. Consumers remain active, but more selective, of course, among their higher price items that they're actually putting in their grocery baskets. Also want to talk a little bit about the labor market. Never want to leave that off the table. We actually start off with a good number there. The jobless claims actually had an initial plunge. Initial claims actually fell to 189,000. That's the lowest we've seen in decades.
I've seen a number that low.
Exactly. Now, that said, we still want to go ahead and make sure we have fidelity with the appropriate picture, which is, even though you're still seeing news from time to time that this company is letting go this many thousand, that company, overall, we're seeing nationwide is a picture that the employers are, for the most part, husbanding the employees that they have. They're not really adding a lot of employees, nor are they really letting a whole lot of them go necessarily at the same time. But that said, that gives you at least a little bit of a picture, again, sort of a more stabilized picture of the labor portion of the economy. But I know we got some Fed news this week also.
We did. It was a big Fed week. They came out with their interest rate decision. No surprise there. Yeah. They left rates unchanged. Well, what's a little bit surprising was they had 4 dissenters this time.
That is unusual.
The new Stephen Moran, Trump's nominee, nominee wanted to cut rates.
Big
He's about the
surprise.
only central banker on the planet that wants to do that right now.
Yeah.
So we had 3 dissenters. They wanted to, not on the interest rate decision itself, but on the language in the FOMC statement. The statement has a bias towards easing. They wanted to remove that. Interestingly, of the 3, 2 are women that have actual real trade desk experience, one with the Fed itself and then one with Goldman Sachs. So that's invaluable real world business experience. So respect their dissension, actually, definitely. What I was particularly impressed with was Chair Powell's speech. It'll be his last one after his presser. He very strongly is going to stay on the board. And there was some uncertainty around that with Kevin Warsh coming in to replace him. And the reason is, I mean, part of it is the lawsuit that's going on, which got dropped because of
no evidence
whatsoever. Yeah. But more importantly, he wants to ensure Fed independence. So he's staying on to ensure that. To Kevin Warsh's credit, the incoming chair, he also believes that Fed independence is critically important. So that was strong for that. Yeah. So overall, we had a good week in terms of earnings. Last night we had Apple, which we've owned almost as long as Microsoft and JP Morgan since the financial crisis. Excellent results across the board. Of course, it's a big heavyweight, probably our largest holding here at SGK. Stocks responding well, about 4% today. This morning, one of the new stocks we added last year, Lind, which is an industrial company. Think industrial gases and for healthcare, soda machines, a very resilient company. They raise their dividend every year. It's a good dividend payer.
Love the dividends.
Again, very solid results. They tend to be conservative, but they did increase their forward-looking guidance. And again, stocks responding favorably, up close to 4% today. But Eric, why don't you hit a couple of the heavyweights for us this week?
Excellent. So again, I like to start out nice and strong. 2 names in your portfolio. I'm going to start off with Visa. Visa, I know a lot of our clients ask, why is Visa considered a tech company? And the fact about it is, the truth is, they actually are a tech company. They're not a bank, okay? What Visa does is it facilitates payments between merchants, consumers, and banks. And what they do is they actually charge one small flat fee, and then they charge a second fee, which actually goes up or down depending upon the actual size of the transaction. But again, it's all facilitation of movements of money. A lot of people also are not familiar with the fact that they have also cross-border payments is another big earner for them as well.
It's very profitable.
Very profitable part of their business. And then also fraud detection and fraud consulting. So again, these, I just want you, again, to be familiar with all the names in your portfolio and exactly what they do. Really strong start for them. Earnings per share, $3.31. It's beat expectation. Top line growth rose 17%. That's the fastest since 2022. What the shares do on the news? They're up 8% on the news. So again,
fun fact on Visa, I read one time that they process 10,000 transactions a second. Yeah, there's the technology for you.
That's a few. That's a few. Okay. Alphabet, again, another really strong earner in your portfolio. Again, many of you know Alphabet as the parent company to Google. That's considered to be part of their alpha bet, if you will, okay? But they have several other bets as well. Did you know that they also are the owner of YouTube? YouTube has top line, okay, sales of over 50 billion with a B dollars per year. On top of that, they're also the owner of GCP. GCP is one of the top 3 companies as far as cloud computing is concerned. So there are 3 that are the top that comprise over 70% of all cloud business. So that's Amazon's AWS, that's Microsoft's Azure, and then Alphabet's GCP. And those 3, again, comprise over 70% of all the cloud business. And that's part of what you own in your portfolio. What kind of earnings are we talking about? Blowout quarter. Great. Earnings per share of $5.11. That's $94.7 billion with a B, far exceeding expectations. Cloud accelerated. Google Cloud revenue grew to $20 billion, driven by what?
AI demand.
AI demand, okay? This is hitting on all cylinders here. Now, with all of that, this also comes in small price also, which is they also have to keep spending a decent amount. And that is capital spending raised up to $190 billion actually to meet all the AI needs. So again, giveth, taketh, but again, a really strong company. So
it was, yeah. I'm going to hit the highlights on a couple of companies that fly under the radar, not necessarily household names. A new addition we're working on incorporating in client portfolios, Cadence Design Systems. So they they design chips, semiconductor chips. So their clients are not only the NVIDIAs of the world, the semiconductor companies, but also companies like Microsoft, Amazon, Alphabet, because they're internally going to start producing their own chips. So Cadence Design Systems, we think are going to be a really strong addition to client portfolios. Why don't you talk about Moore's Law?
Yeah, if I could, throw in there just to, again, make you more familiar. So if you're familiar with Moore's Law, which is actually getting a denser and denser population of transistors on the chip, as a matter of fact, we got to the place whereby we are no longer capable, humans are no longer capable of actually being able to design such a level of complexity to get a denser number of those transistors onto the chip. Now we actually need computers to actually do that. And that's precisely what Cadence does. It actually utilizes AI technology to be able to create the complexity of design.
There you go. There's that word again, AI. They had a very strong quarter. They beat EPS and revenue expectations. Earnings grew 25% year over year. So a strong growth company. And we like the prospects for their Hexagon simulation acquisition. Another company that flies under the radar, Ventus. We've owned that since the fall of pandemic here. Well, I'll forget that period. But during the pandemic, the real estate investment trust, the real estate sector got hit really hard. So we felt it was a great opportunity at the time. Great dividend payer. So they own and operate senior living facilities. And you look at the aging population here in the U.S., and that's a big area for them. Doctors' offices as well. Yeah, so they had a really, really strong quarter. Sales were 22% year over year. They don't use EPS as a measure. They use what's called funds from operations per share. But again, very strong number there. And they raised their forward-looking guidance as well, which we really like. Last one I'll touch on is a company called Carrier. Stock had been under pressure for a while. We saw a nice earnings beat, which was nice, but they've had a string of quarterly revenue declines, and they broke that string strongly during this period. So it's nice to see revenue growth there. And what we attribute that to, Eric?
I think it might have something to do with AI.
It has something to do with AI. They saw data center demand in the quarter jump 500%.
Wow.
That's a big number. Yeah.
Wow.
So that's it, folks.
I think that about wraps it up for us today. Thank you again for spending some time with us. We hope you have a fantastic weekend. And as we say here at SGK, cheers.